What's up, everyone? Welcome to another episode of The Daily Dollar. This is episode 5 of season 2. I'm Art Morrison III.
I'm Cait McCready.
What?
Oh, no, I'm sorry.
What?
I didn't know it was 5. I thought it was a different number.
What number did you think it was?
You don't want to know.
Okay. Well, anyway, this is episode 5 of season 2. It's episode 40 something of all time. I don't know. We probably should keep a running record of that.
Yeah.
But on this episode, we have it could be a touchy topic for some people. It could be a exciting topic for others. So I want to dive right into it because our goal in this podcast is try to keep everyone abreast and make sure everybody's up with the times. So what we're going to talk about today is how do you beat a down market as an investor, AKA how to always win. So I wanted to talk about this because a lot of people get stuck on one singular strategy, and whenever that strategy doesn't go well, they run on TikTok and talk about how terrible real estate is as an investor, right?
Yeah.
Like, oh no, my hot water heater went, or I had to fix a toilet, real estate stinks, stocks, crypto, right? But not understanding that that's only one, that might only affect your cash flow, right? There's other ways to make money in real estate. We talk about equity, tax benefits, etc. So, I wanted to go on a little bit about how when you buy properties, if you keep all of the different ways you can make money or all the different benefits of real estate in mind, you can always win.
Okay. No, this is fun because I didn't know what it was. Actually, I don't know what any of the topics are until you say them. So.
Oh, yeah. So there we go. Catch out the bag. You don't have meetings about podcasts. So yeah, speak briefly about like just some of your experience with like having to pivot in a deal, or some of your experiencing multiple benefits of real estate in one deal.
Right, okay. So, we're going through one right now where we have a house on the market. It's taking a little longer to sell. Interest rates have shot up a little bit, so we've lost a few buyers. Actually, we have 2 that are in this situation.
Yeah.
One just sold, but it was on the 4th buyer that it actually ended up selling.
Yeah.
And then one right now that's still on the market that a couple of buyers have fallen through already. And we're talking about refinancing and holding on to it and keeping it as a rental unit.
So to be clear,
Yeah.
We're talking about our house flipping business. It was a property we purchased to flip, but what we want to discuss today is buying correctly. We always buy our properties. We try to buy properties with at least 25% profit margins or more, AKA 25% of equity or more. And that gives us a safe space to be able to refinance and hold on to the property, which means that that property also needs to be in an area that we feel confidently it will rent. Mm-hmm. So that whole spiel and intro is really to dive into, all right, down market is coming. Everybody's talking about how the market is like, gonna be stinky, right? No good. People, oh no, like the market values are dropping. So going into this market, give everybody a gem or a piece of advice on how to approach this market as an investor.
As an investor, my advice would just be very strict about what you're purchasing a property for. When you do your deal evaluations, you don't have as much leeway as you did, say, like even a year or 2 ago, to go up on price. So I guess what I'm saying is be strict in your negotiations when you are negotiating with a seller.
Well, what strategy are you talking about when you're buying a house? Are you talking flipping?
Yeah, flipping, but we try to do our deals and our underwriting and deal evaluation so that it leaves us with enough room to sell, but also be able to hold on to a refinance.
Yeah, like how we started the episode.
Right, exactly.
And that leads right into really what the concern is, what everyone's concern. Like, so it's not a misconception, but the common knowledge is like, oh, it's a down market, so it's a good time to become an investor. Like, everybody wasn't investing the last 3 years because they were waiting on this magical time when properties are cheaper to buy property. So like, that's one benefit. That's one way you can for sure always win as an investor, is to wait until there's a down market every 10 years. Sure, if that's your strategy, then go for it. But it's really about how you approach each market. So like, as investors, if you're a real investor like us, No, but really, if you're a real investor, you're investing all the time.
Yeah.
So you have to play the valleys and peaks of the market. So knowing that this market is going to change and take a dip, that's where we're looking at our properties to potentially transition them from, okay, maybe we don't flip this because the market's going down. If this thing don't sell for what we thought it was going to sell for, what's our option? Well, what if we rent it out for a year, 2 years? Make sure we make all our money back. We're not going in the red because we're not overpaying and carrying costs, taxes, all that, just waiting to sell it. Let's make some rental income for the next 2 years and then sell it in 2 years for the same price that we planned on selling it for instead of taking a loss.
Yeah.
That's a strategy, or an ability, better yet, because like we didn't go in with that strategy, but like we evaluated the deal in a way that we knew, hey, if this market turns, we're straight. We're just gonna rent the property out. Even if we break even for 2 years, yeah, it stinks. The opportunity cost of money, our money is stuck into it, but we didn't take a loss.
Yeah.
And we didn't have to experience this big fear that people who aren't investors. It's ironic that people who aren't investors have the most fear.
Yeah, it's funny, and I don't mean to like go a different route, but we've been in real estate for however many years now. I feel like, and we're experiencing multiple different markets at this point. In every market, I've heard probably from the same people why not to buy real estate.
Yeah, it's like, yeah.
And it's always the same people. Like, okay, like, are they talking about don't buy real estate in this market, wait till it changes, but then it changes, and they're saying don't buy in this market, or they were told, or
you
they
just don't
want
to buy. You
yeah,
just
it's just
invest.
like, okay, don't buy real estate.
And you don't want to invest because you are, and I don't mean this in like a bullying way, cancel culture.
Yeah, here
you're a
we go.
loser. No, really though. As someone who loses, it's like a chicken or egg.
Yeah.
Losers are used to losing, so they make decisions based on scarcity and loss.
Yeah.
They don't make decisions based on abundance or what could possibly happen from an optimistic perspective.
They're just low risk people.
Losers, I said it. I know a word I use. It's not low. There's no low risk or high risk, because even if you're not an investor, we don't control the market. You could be a renter, not taking no risk, but then the landlord goes up when you rent. You could just be a homeowner. I just want to own my primary home and still go upside down because the market changes because you didn't buy correctly. That's not an excuse to, anything is an excuse not to invest. You don't have to be an investor, but I'm saying that's not an excuse to knock investing or try to come up with a reason
Yeah, it's
that
better to
investing
clarify
isn't
that.
good.
Yeah.
Clarify what?
Like, it's okay if you
So
don't
forget
invest.
real estate for a second. Wait, it's okay if you what? You talking about me or the avatar?
No, because you have such a sharp tongue that you say something sometimes I would never say. But when
That's why I say it.
I
not
know,
you.
exactly. But when you clarify, like, okay,
But I'm
just
not
don't
even
speak
talking
on
about.
it then.
I'm not even talking about real estate. Investing in general. If you think you're going to be successful without investing, you are objectively a loser. Like, you need to invest in something.
Yeah.
Think about it. Even the people who are like, I don't believe in the stock market or crypto or any of that, like, they invest in something that they can pass down to their children.
Yeah, what do you
Life insurance is an investment, you know what I mean? So, but you can't always try to find an excuse or a reason, my point, to not invest in yourself or in
Right.
your future and your kids. That, in my opinion, makes you a loser.
Okay.
You guys got
Hot
two.
take.
You guys got two episodes in one. It's not a hot. You keep calling it a hot take. What is hot about that take?
I think more so like we could clip that.
If somebody says, "Yo, I have an investment for you where after you buy it, okay, first of all, we're gonna take your money and we're gonna multiply it times 10 because we can borrow 90% of what I want you to buy, and then you just gotta bring 10%, first of all. There's no other investment you can do that. Then second of all, they say as soon as you buy it, you're gonna start making money from what's called rent. There's people that live in this thing and they're gonna pay you. You're gonna pay the debt. After that, you keep it, number two. Then number three, like also the longer you hold it, because more people are being born and the earth isn't getting bigger, real estate is becoming more valuable. So that asset is also gonna go up in value. Oh, and hey, on top of that, you're gonna pay less taxes because of this asset. And somebody says, well, this market, I don't think, this isn't a good market to buy that asset, even though you just broke down to me all the benefits I would have. And then I hit them on the next market, like, yo, we finally got out of that market. Oh, you were right. Now we're in a better market for you to purchase an asset. And then you give me another excuse What other definition of a loser is there?
I don't know, whatever Webster says.
If you don't invest in real estate, you're a loser. No, I'm kidding. But all jokes aside, if you want to be a winner, you need to go into real estate with a plan to win. It's that simple. It's not like there's no secret sauce. You have to have a plan to win. So for example, I'm a basketball player. When you go play basketball, there's only one way to win a basketball game: score more points than the other team. That doesn't mean you just go out there like, yo, we're gonna score more points than the other team. Sometimes you have strategies of, hey, we need to slow the game down because they're a fast-paced team. Or you might say, hey, I lost you because it's a basketball reference, but whatever. You might say, hey, we need to play really good defense against this team because they're a better scoring team than us. So you might have multiple strategies to get to that goal of winning. So to make sure you always win in real estate, or to make sure that you, to answer the question, always are successful in any market, you just have to simply plan to. You have to have multiple strategies. You have to buy real estate with enough margins to be able to execute multiple strategies. Don't lock yourself into one strategy.
Yeah.
Loser. Kidding. That's the Daily Dollar for today. I'll catch you guys tomorrow. I'm Art Morrison III.
I'm Cait McCready.
Don't forget to like, share, subscribe, YouTube, Spotify, Apple Podcasts, all your favorite places to listen to podcasts. Also, be sure to visit our website, www.unitedhomerelief.com, to check out. We have a couple cool things up there, but number one, we have a free webinar up there that you can get to learn more about real estate, just like this podcast, but a little deeper. And at the end of that webinar, there's a special treat that allows you to A, learn from us more than you're learning on this podcast, or even B, invest with us, partner with us. So check out that website, a lot of resources there. See you on the next episode. And remember, don't be a loser. Peace.